Good morning and welcome to Bazaar Morning Call. I am Anuj Singhal, with me Sonia and Prashant. Well, we are in for an auspicious start to the day. It's Tuesday and everything is Mangal, as they say in the market. The Nifty all set to hit 18,000. In fact, the SGX Nifty is indicating that the start itself could be above the 18,000 mark. The dollar index has retreated to 108. Not as if 110 was hurting us, but the market will take 108, of course, with both hands. And global cues clearly supportive of equities. Big question is not just for the day, but from here on, can by Diwali we hit new all-time highs? Prashant, Sonia, hi, good morning.
Hi, morning Anuj, morning Prashant. I mean, it's going to be an early Diwali for sure, right? If it's not already for the market. I mean, that's been the kind of momentum that we've had. As you said, it was great going for the US markets as well overnight. You had the Dow, which was up almost 230 points. And this is 4 straight days of gains that we've seen in the US markets. All eyes will, of course, be on the inflation data that comes out today. It's the last data point before the Fed meeting. But I think for now it's priced in. There's expected to be no major change in inflation, and a 75 basis points Fed rate hike has been priced into most risky assets across the globe, and ours is no different. For our own market, though, it's been solid money that's come in from FIs. 2 days running now, over 2,000 crores in the cash markets. DIs have sold a tad bit, and in the last 7 trading sessions, the FIIs have pumped in almost 6,000 crores. So the money is coming in thick and fast. And we were covering this on our show, Editors Roundtable, as well last week, where we talked about how the Nifty has outperformed the global markets in a big way. Up until now, the Nifty is up almost 3.5%, while most markets are seeing double-digit losses, and for a variety of reasons, purely being macro-led and an improvement in corporate profitability as well. So, Anuj, generally bull markets are based on an improvement in earnings, and that's perhaps what you're seeing play out in our markets too. Structural uptrend, which is based on an improvement in macros. Specifically, I'm talking about India.
Even if it's not about the macros, Sonia, it's all about FOMO. Look, there's still a denial. A lot of people still can't believe the Nifty is at 18,000. And they can't believe it because they did not participate in it. A lot of crowd has missed out on this rally. And any call for correction is now actually hope for correction. Everyone wants a fancy little correction to get in. And this is a market which is not giving you that. It's a market in which you're making money if you're sitting, not doing anything. Because look, yesterday, for example, in the second half, you may have felt, oh, the market's not doing anything in the last 1 hour. I bought and the market's not going anywhere. But the market will reward you this morning. So if you have been in this market, this is the market which is rewarding you for that. For me, the key data point to watch now is what happens to FII shorts, because we have started to see some signs of short covering. Yesterday, for example, almost 10,000 shorts were covered if you were to add the longs and deduct the shorts over there. But the FII shorts are still at 75%. I don't know why we still have such a heavily shorted market, and the net contracts on the short side are still at 66,000. Now, what might happen today is you may open above 18,000. The algo trades might see some profit taking, but then after that, there might be a second move above 18,000. And if you sustain above 18,000 in that second move, then you see perhaps even bigger short covering, because these shorts then have to cover. And what makes me so confident about the market moving on even from 18,000 is the fact that the laggards have started to participate without impacting the leaders. IT, I've been talking about it for 2 days now. In fact, yesterday also I made this point. That there's a catch-up trade which is on for IT along with banks. And IT index, just to get to its 200-day moving average, just a mean reversion trade, which happens in the market all the time, needs to rally 11% just to get to its 200-day moving average. That's the oversold nature of this index. And of course, the bank Nifty is within 3% of all-time high, and that perhaps looks like could be the first big index to get there. I think the other point that I'm making, and despite the quality of rally being a bit suspect, the next round of rally could actually belong to small caps. Because if you look at the indices, the mid-cap index has moved within 2.7% of all-time high, but the small-cap index is still about 16 or 17% away from its all-time highs. So that could be the area to focus on, small caps, cash stocks. Of course, all of this depending on the fact that if there's a downside, the 20-day exponential moving average, which is rising now, that holds. That's been holding. You had that test last week, and the market sort of defended that 17,600 is that level that is working. Prashant, hi, morning. What do you have for us?
I mean, so you covered local. Let me just cast a quick glance on the global. And I think the one data point is the US inflation number. This is the last step, sort of stop on the way before we get to the 21st September FOMC meeting. So very briefly, why does this matter? It doesn't matter for the 21st meeting because irrespective of what this number is, it's likely that we'll get a 75 basis point hike. But it matters for post-September FOMC pricing. What will happen in the November meeting, what will happen in the December meeting of the Fed after what we see in September. Now, investors have been discussing the fact that, inflation numbers will cool off for some time now. And this number in that sense will tell us whether it's actually happening or not. Markets have also kind of positioned for this. Dollar has been weakening. It's not been going up. Equities have rallied a little bit. I mean, rates have not cooled off. Rates are still high. But the other two legs of the market, equities and the dollar, they've done quite well. Now, what should you watch out for? A 0.2% sort of month-on-month rise in core inflation would reinforce, USD weakness, dollar weakness, which is essentially what you want. You want the dollar lower, not higher. A 0.4% month-on-month core reading could boost the dollar. Now, I would say that even if you get, by the way, the consensus is expecting about a 0.3% rise month-on-month. So 0.2 would sort of reinforce the downside, 0.4 would be slightly higher. But I would say even if it is 0.4, which is the fact that it slightly overshoots what the expectations is, the US perhaps has just about started another leg of bounce. I'm talking about equities in particular. I don't know if rates will cool off as well. We'll have to see. So far, they have not. The dollar has. But I think equities, after 3 weeks of being down, last week bounced about 4%. So while markets like India, actually there has only been one market, the Indian market, which has kind of been going the other way, while the rest of the global market has gone the other way. US has started, it's perhaps at the initial stages of a little bit of a bounce, which can get to about 4,300 on the S&P, etc. So, there may be a little bit of pause going into the CPI number, but I think unless and until there is a big blowout number of which there is no real expectation, things may continue to move on and the global picture may remain supportive. It's not really meant that much whether it's supportive or non-supportive for India, but I mean, supportive does not hurt at all in that sense. So we'll watch the space closely, watch the dollar reaction, and I think the equity reaction follows after that. Sonia.
Absolutely. For our own markets, you can argue, of course, that is this a start of a new bull market, etc. But in the US markets, there's still a lot of caution, right?
Yeah.
People are calling this a bear market rally, the 4 straight days of gains, because they are perhaps heading into recession. There are concerns there. It's a very different picture for the Indian market. So let's see how this goes. But on the equities front, first up, we have Amish Shah of Bank of America Securities, who says while they expect further downside risks to earnings from spillover effects of weakening global macros and high base for Nifty profits, it's unlikely to be steep near term given sharp corrections in commodities and earlier highlighted macro events of calendar year 2022 have either played out or provide good visibility. In that context, they expect the market to remain volatile but have an upward bias to continue and remain overweight on domestic cyclicals and defensives and underweight on external facing sectors.
Sabiran Chakrabarti of Citi says that the consumer price inflation number here in India has been in line with RBI forecast. He says there could be a mechanical downward revision to GDP forecast at the September MPC meet. He adds the RBI could temper the pace of policy normalization in September by opting for a 35 basis point rate hike, but a 25 basis point hike is also possible as some MPC members have been arguing against an overly restrictive monetary policy. Samiran goes on to add, he says change in MPC stance is unlikely in September.
Okay, well, the rupee yesterday rose about 2 paise. We're still closer to that 80 mark. 79.55 is where the rupee closed yesterday. Let's get you some views for today. Then Bhaskar Panda of HDFC Bank says that the dollar index retreated overnight as other major currencies rallied on the back of the hawkish central bank stances. He says that the ECB has not only hiked interest rates aggressively, but also issued hawkish statements to bolster its efforts to tame inflation. And oil has rallied from recent lows, but trades below $95 a barrel. He says all this and positive FI flows should help the dollar INR. He expects the dollar INR pair to trade within a range of 79.30 to 79.50 for the day.
All right, on bonds, we have Bhaskar Panda who says that Indian consumer price inflation reading came in higher, which means further hike in the upcoming September policy cannot be ruled out. He says, given this situation, yields may not come down drastically from here. The 10-year benchmark yield is expected, according to him, to trade in a range of between 7.15 and 7.25% for the day.
Okay, we do have a lot of stock-specific action to track today, so we'll get to that in just a bit. But here is our top 10 segment. We're looking at names like BPCL, HPCL, IOC, Ujjivan Small Finance Bank, HDFC Life, IRB Infra, HAL, BEL and Bharat Dynamics. They're all on our radar on the back of positive news flow. And we also have Krishna Medical, a stock that's expected to open perhaps in the red. We'll tell you more about that in a bit.
Okay, so that's what's coming up in a bit. But let's get the global picture out of the way. Mark Matthews of Bank Julius Baer and Company is joining us right now. Mark, great to have you back in the program. Thanks very much. Just a quick word on what we're seeing in the US. And I'm talking about one particular sort of yield spread, the difference between the 2 and the 10-year, which has steepened recently by some almost 28-30 basis points since it made a low in mid-August. Some are reading that to mean that maybe expectations are kind of veering to the fact that perhaps we'll actually have a soft landing. Things will not get as bad in the US on the growth front. Do you really think that is the case? That's how we should read this indicator? This is the 2 minus 10?
Well, I can't comment specifically on that spread. I'm sorry. I wasn't aware of it widening the way you said, but I would generally concur with the idea that we will avoid a recession. Our own models suggest that. The Federal Reserve's models suggest that. And various economic data shows that the U.S. economy is actually in pretty good shape. I think first and foremost, the one to cite is the fact there's 11 million job openings, which is something like twice the number of people who are unemployed and actively looking for work. So if we do have a recession, I think it would be extremely mild because of that huge pent-up demand for labor. But also, the consumer sentiment surveys look like they're turning around a little bit. The University of Michigan one was reported recently. Long-winded answer to your question, I don't think there will be a recession in the United States, and therefore the fixed income market should reflect that.
Mark, good morning. The Indian market has been charting its own territory, its own charts, right? We are very close to all-time highs, and we've seen quite a bit of buying by foreigners as well. What's leading to this massive decoupling?
It's not just India. Brazil's up 15% year to date in dollars. Singapore is in positive territory. So is Indonesia. There's several, Asian/emerging markets that are actually attracting a lot of inflows. And I can't precisely say why, because the dollar has been such a big headwind. But what I would say is if the dollar is actually reversing course now, then I think that these emerging markets could really take off. I guess perhaps one thing is that their inflation rates are low compared to the West. India's inflation is lower than that of Germany or the United States because it never did all of that huge stimulus in 2020 and 2021. And so they don't have, they're not coming off of a sugar high the same way the West is. I think people are looking for alternatives because they realize the big technology-driven, US-driven bull market of the last decade is over. And we don't know entirely what the new market will look like, but we're starting to see little green shoots here and there, including in emerging markets. And my sense is that the emerging markets, excluding China, are going to outperform in the coming 1 or 2 years, including India.
Well, that has happened already, right, Mark? I mean, since the last time you were here with us in the studio, the market has had a huge surge. I mean, it's been a rally across the board, whether it's in financials, it's in mid-caps, and now we're hitting psychological levels as well on the upside. What is your thought on how the Indian markets could move from here? Would you put incremental money to work now, expecting a big rally post the Fed meeting, purely because India has been outperforming on account of better macros? Or are you still a bit cautious?
Actually, I would respond in the positive to your question. I would. I think India is poised to go up a lot. And the reason is that what kept the market buoyant over the last year or so was local buying. And the local buying's still there through the SIPs. And I feel that locals realize there's a virtuous economic cycle in India. They can see it with their own eyes. It's the foreigners now who are starting to come to India. And I think they're just beginning to come into it. And I think, just to reiterate what I said earlier, people are looking for things outside of technology, outside of the U.S. They're looking for green shoots around the world. Where will the leadership come from? And India is down 5% in dollar terms, I think. But it's positive in local currency terms, and if the dollar starts going down, it will be positive in dollar terms too, and it'll join that little collection of countries I told you, like Singapore and Indonesia and Brazil, for example, of countries that are actually up year to date, and that just naturally attracts attention in a sea of red to see some green.
Mark, the other bit has been, the conflict, right? Russia and Ukraine, and there's a spate of articles, etc., would suggest that there are things are turning around there, and the Ukrainian forces are reclaiming many important cities. Any thoughts on that? What's going on there? I don't know if you've looked at it. What could be the implications if that were to continue?
The market seems to be interpreting the big Ukrainian advance in a positive way. I don't think it is. What we want is for Russia to have peace with honor. Otherwise, it's very dangerous. And I don't see this as something that moves toward peace with honor. It seems the Ukrainians are clearly emboldened, as they should be, by their advances, and not willing to concede anything at the negotiating table to Russia, including Crimea. I think it makes the situation more dangerous, in fact.
More dangerous, in fact. So, Mark, sorry, getting back to India then, at some point, do you reckon that we run a risk of getting into some kind of bubble territory, if not already there? I mean, purely in terms of valuations, the premium is already at a record high compared to the emerging market peers.
Well, I think with the exception of the bottom of the global financial crisis, India always traded at a premium to emerging markets. There's a lot of different reasons for that. I'm not saying they're all merited, but it's the reality. And I think that the market can go up if earnings go up, and I think they will. And the expectation for earnings, we started the year looking at for about 25% earnings growth, and then that came down all the way to the low teens. But now I think the earnings revisions for India could start to recover again. And anyway, yes, I think that the market can go up. If the earnings go up, it will grow into the earnings.
Okay, well, the corporate profit to GDP ratio is now at a decadal high of 4.3% in India, so it's already improving quite a bit, the earnings picture. One more macro data point that's working in our favor, Mark, is the fall that we've seen in crude. Of course, this morning it's risen to $93 a barrel, but from the highs that we saw in July, the crude prices are down about 30%. I mean, the high was around $128 a barrel. Are you factoring that into your positive commentary on the Indian markets, or do you think there could be incremental upside because of that?
Well, our view was always that the oil price would come down, and so it was a difficult view to have when it was at $125 a barrel. But we still think that it should be about 75 12 months from now. And the biggest reason for that is, to quote the old commodity trader saying, the best cure for high prices is high prices. So what we've had is a very robust supply response. You're seeing it in Europe, by the way. The Europeans have bought so much natural gas and increased their storage that their natural gas price is down about 40% over the last 3 weeks. And gasoline prices in America are falling too. And so I think that that combination of a strong supply response, as well as there's no doubt some demand destruction that's been going on. A lot of factories in Europe, for example, have had to be shut down because they just couldn't make money with electricity prices so high. I do think that the market will continue to balance in favor of a lower price.
Welcome back to Bazaar Morning Call. This morning, the SGX Nifty is indicating that we could scale the heights of 18,000. We will be there, at least at opening. Whether it lasts through the course of the day, only time will tell. But everything seems to be working in our favor. All the stars are aligning, it seems, for the market to get to that level again. But let's get our entire research team to give us the list of top 10 stocks as we kickstart trade this morning. Anuj, let me begin with you. What are you looking at today?
Well, Sonia, for for 2 days I've been talking about IT stocks, so I thought I'll change something today. I think the way dollar has retreated and the way global cues are supportive, my sense is today could be a bit of a metals day, you look at stocks which are taking support at 20-day moving average, and again as a mean reversion trade, like you saw in IT stocks, moving towards the 200-day moving average. So I think Tata Steel and Hindalco. And again, stocks where you have quite a bit of FI interest as well. So that's something that you're going to look at. So that's Tata Steel, of course, the first one that I'm tracking, and Hindalco is the other one. If you see both, of course, almost similar charts, taking support at 20-day moving average, and now perhaps can they move towards the 200-day moving average as a mean reversion trade, like you saw in like you're seeing in IT as well. So I think laggards are going to make a bit of a catch-up play over the next few days or so.
All right, metals did well yesterday as well. The index was up about 1.5%, along with IT. I mean, the top two gainers there. We'll watch the space, Tata Steel and Hindalco. Now, state-run oil marketing companies may get a bit of a fillip. Sources say the government is likely to use funds mobilized through windfall gains tax to help oil marketing PSUs stay in shape. As things stand, oil marketing companies are taking losses for every litre of diesel being sold. They're not losing any more due to petrol. Timsy is here with his report. Timsy.
Well, that's right. What sources are indicating to us is clearly that the government is likely to use funds mobilized from windfall gains tax levy to help public sector OMCs to stay in shape. Sources are indicating that government feels PSU OMCs, they need help right now. They've already incurred a huge loss, a net loss of 18,500 crore rupees alone in first quarter, and second quarter too seems to be a little difficult for them. Thus, they need government support, and government feels that rising inflation, volatile fuel prices may pose additional burden on OMCs. Thus, it is very important for them to stay in shape. Government is currently contemplating a mechanism to funnel in funds to OMCs, and soon stakeholders will hold discussions to see how best these funds can be utilized, and most importantly, what could be a mechanism to funnel in these funds. The final contours of financial aid mechanism for OMCs is still to be discussed. That will be something that Finance Ministry officials along with Petroleum Ministry and these OMCs will sit together and see what could be a best possible mechanism. But yes, as of now, sources clearly saying that the levies that the government has earned from windfall gains tax was meant for exigencies and not to meet fiscal requirements, and exigencies like to keep OMCs in shape is something that they need to address immediately. Back to you.
All right, thanks a lot for that. Well, moving on, let's track some more stocks this morning. Ujjivan Small Finance Bank is on our radar. Abhishek is here with more on that. Abhishek, go ahead.
Well, Sonia, our news break has been confirmed that Ujjivan has launched a QIP. They have launched a QIP of about 475 crores. We had indicated that it would be around 400 to 500 crores. Demand is strong over there. What we are gathering from sources is that the demand is more than 1200 crore, which is about 2.5, 2.6 times of the IPO. There are 4 bids which are at 100 crore or even more. So SEBI floor price is around 21.93 per share. However, the indicative price has come in at 21 per share, which is about giving an upside to the CMP of 17% if at all you invest. Tier 1 ratio post this fundraise actually increases to 22.4 from 18.7% earlier. The equity dilution is about 13%. Net worth increases by close to 16%. However, book value increases only by 2.4% on account of the heavy dilution seen. Overall, positive for Ujjivan that they are raising funds and there is strong demand over there. Back to you.
Okay, Abhishek, thanks a lot for that. Now, HDFC Life is in focus. I think Nimesh has been tracking this stock for some time. Standard Life, which is now Aberdeen, is going to sell part of its stake, Nimesh?
That's right, Anuj. So they're looking to sell 2% stake in HDFC Life today via block deal. The book was launched last evening. The indicative price is between 564 to 578, which means up to 2.5% discount. Now the execution will be key. If it happens in the block window, then I guess stock will react in the green. That's one part. As far as the execution is concerned, with this stake sale, they will raise close to $313 million. Now post this 2% stake sale, the combined holding of HDFC and Standard Life will fall slightly below 50%, so it will be 49.5%. But do remember there was a preferential issue as well, which was announced last week to HDFC at an average price of 558 rupees. And what my understanding is, the remaining 1.7% could be directly sold to HDFC going forward. So maybe in a way this could be a clean out trade, but execution will be important. But still, I'll go with the green for the fact that there is demand for this particular block. And if it's executed in the block window, you will see a bit of short covering as well.
All right, Nimesh, thanks very much for that. But there's one more, right? This is Krishna Institute of Medical Sciences, KIMS. General Atlantic has sold 22 lakh shares.
That's right, Prashant. So, Krishna Medical was part of my chatter list as well yesterday. And now there is a confirmation that General Atlantic has sold another 2% stake in this particular company at an average price of $12.50. What is more interesting is in terms of buyers, large part of this whole block was bought by ICICI Pru Mutual Fund across two schemes, the small cap fund and the long-term equity fund. Now, even last week, General Atlantic had sold close to 17 lakh shares at an average price of 12.30. Now, if you look at the shareholding pattern, as of June 22nd, June 2022, GA was holding close to a 17.4% stake. They have sold 4.7, 4.8% till now in the last 10 days. So, while they've been selling, every week, so far they've sold 4.5% stake. So there is going to be a supply overhang, but the good part is that the market investors are buying this particular block. So I'll go with red simply because there is still a large overhang which can come from GA in the future as well.
Okay, well, let's move on. IRB Infra has some data on the toll collections which look quite good. Vivek is here to give us the latest on that. Vivek, over to you.
Well, that's right. The IRB twins, both IRB Infra as well as the Infrastructure Trust, both of them are in focus. As you highlighted, strong collections as far as the August toll numbers are concerned. But we do have to keep in mind that, the base number is a little skewed. So the August, 22 toll collection is up almost 35% on a year-on-year basis, coming in close to the 336 crore mark. And when you're talking about IRB InvIT, the numbers are up almost 38% on a year-on-year basis, coming in at close to 72 crore mark. Now, for both of these, infra companies, what we need to keep in mind is the fact that in August 2021, the toll collections were actually suspended due to the farmer agitation protests that were going on. And the other thing to keep in mind as far as the InvIT is concerned was the fact that two of the projects actually ended their concession period, so they are not in the numbers. So overall, strong numbers, but we have to keep in mind that the base is a little skewed.
Okay, Vivek, thanks a lot for that. Let's go across to Vahishta now. She is tracking some defense companies. Vahishta?
Hi Anuj, thanks for that. Well, the defense players are holding an investor outreach program, and this would involve the participation in non-deal roadshows from September 12th to the 15th. Now, these roadshows are going to be held in Dubai and in Abu Dhabi and will set the stage for future stake sale by the Government of India. Now, the Government of India shareholding for some of these companies like Hindustan Aeronautics is high at 75.1%, while for Bharat Dynamics is at 74.9%, and Bharat Electronics is also high at 51.1%.
Okay, thanks a lot for that. So here's a quick recap then of our top stocks with positive news flow this morning. There's BPCL, HPCL, IOC, Ujjivan Small Finance Bank, HDFC Life, IRB Infra, HAL, BEL and Bharat Dynamics. While stocks with negative news flow, there's Krishna Medical. But let's get a quick handle on what's happening in the world of commodities. Brent is back at $93 a barrel. Manisha Gupta is joining in to give us a roundup of the market there. Manisha, good morning.
Morning, Sonia. Well, yes, $93 is back for Brent and $87 for the U.S. crude prices. This is ahead of the tight supplies because of the winter heating season. Also, Russia is slashing gas supplies to Europe, and G7 nations looking to implement price caps on Russian oil. The market's also in premium after the U.S. emergency oil stock show that they are lowest since October 1984. So the support and the premium is back in case of the crude oil prices here. But the support is also back in case for the metal prices, where we are looking at the US dollar rally pausing, actually supporting the metal prices. So whether it's copper, which is trading at a 2-week highs, nickel, which jumped up 3.5% overnight, or aluminum on zinc prices, which have been supportive as well because of the power problems in China and Europe. We've seen 1 to 1.5% of gains here as well. So almost all metals, ferrous and non-ferrous, in the positive in Asia.
All right. Thanks very much, Manisha, for that. Now, inflation numbers in the US have been all the focus, but here in India also we got inflation CPI numbers for the month of August, which has risen to 7% levels. This is higher than what was expected. That number was about 6.84%. Food inflation has also surged to 7.63% as compared to 6.69% in July. Lata is here to tell us and put those numbers in perspective, and also tell us what are any other policy implications, specifically in terms of the RBI's reaction function. Lata, over to you.
Yeah, you know, that is the big bother, that it's come in about a good 15 basis points higher than what the street was expecting. Expectations in the street were running at 6.84 to 6.9. So 7% is a bit of a bother, but one doesn't have to bother much because the Reserve Bank's forecast for this quarter, July, August, September, is 7.1. Now, if you take July and August that we already know, 6.7 and 7, then we are still getting an average which is less than 6.9. So anyway, we are going to do better than what the Reserve Bank has forecast. The worry really is food inflation. As you pointed out, it's a good 1 percentage point higher than what it was in July at 7.6. And within that, it is cereals and vegetables that have risen very sharply. Cereals is important because it's a huge weight and it's important in terms of mass consumption. Now we realize why the government moved ahead and banned rice imports, because they saw this coming. And, you know, things like broken rice can even spread into animal food and therefore become generalized. But the important point is it is not generalized. If you looked at the August numbers, milk, eggs, you know, things which can go because of animal feed getting higher are benign. So it's not becoming a generalized food inflation. It's restricted at the moment, at least, to only cereals and veggies. The worry could be that core inflation is a bit sticky. It's gotten higher, if you notice, from 5.8 in July to 5.9. Some people say it's even closer to 6, depending on how they calculate. And this is largely because clothing and footwear are high. You know, cotton prices are high and manufacturing inflation is still high. That is something maybe some people will worry about. But very surprising, although the inflation number is coming higher, most people are not expecting a repeat of that 50 basis hike that you saw in the last policy. SBI is expecting 25 to 35. It will be a toss-up between the two. Citi also says the same, but they are leaning more towards 25 because MPC guys have made some dovish statements. MPC people like Amisha, like Ashima Goyal. And therefore, the expectation is, although the inflation is higher, the Reserve Bank will not act very aggressively. The Finance Minister also made some statements which is seen as leaning towards a dovish RBI. I just want to add that this will not impact the bond markets much. The bond markets are fixated on bond inclusion, Indian bond inclusion, as well as on crude prices. So this will be lightly skipped by. If anything, it will be positive because many people are expecting 25 basis. IIP, just one word, it's lower than expected. But I don't think too many people will be disappointed because of this. So much of the other data is positive. So consumer non-durables going down, not good for FMCG stocks. But I'm not very sure this will be impactful.
And this may not move the RBI's needle too much, right?
IIP does not at all. Yeah. CPI does. But like I told you, even with this 7%, it comes below their own forecast.
Okay, all right. Thanks a lot, Lata, for that. Well, let's slip into a quick break. We'll get back to tracking equities. Dipan Mehta of Elixir Equities will be joining in for some fundamental stock analysis. We'll also have Sanjay Chaturvedi of IOL Chemicals and Pharmaceuticals to talk about how the company can benefit from Russia's ban of gas supply to Europe. Stay tuned.
Welcome back. The SGX Nifty is indicating that we'll start above 18,000 and then we'll take it from there, of course. It's been a very strong market and just one-way rally is what we have seen. Dipan Mehta is joining us, Director at Elixir Equities. Dipan, hi, good morning. Thanks for joining us. Let's discuss some stocks and news. Dipan, first, HDFC Life, where there's going to be a block deal. What's your view here?
Good morning, Anuj, and thanks for having me on your show. I think we've seen many deals in HDFC Life as institutional investors try and unlock and book some profits. I think it's been a great investment for a lot of the FIs who bought the stock. And it's never really affected the fundamentals of the company. On the whole, I think HDFC Life seems on a solid secular growth path. And although valuations are on the higher side, I think it's been a consistent performer, gaining market share as well. And the most important aspect is that they have been instrumental in launching several innovative products which have been very well received and very aggressive management also, I would say. So very positive on HDFC Life per se. And maybe corrections which come like this, maybe today also because of huge selling, are good opportunities to add some position to HDFC Life.
Okay, add some positions to HDFC Life. This is a roaring market, Dipan. Looks like we're going to be hitting 18,000 today itself and sustaining that perhaps. What do you buy? Where do you add in a market like this?
Good morning, Sonia. Banks, that's where you have to have a lot of your allocation in your portfolio. I would say at least 35-40% or so banks and NBFCs. I think that's one sector which is going to get more and more into leadership position. It's kind of I would say, new growth phase for the banks and NBFCs. On one hand, credit is looking up, interest rates are moving up, so spreads are also stable. And the credit costs are at, I would say, decade lows for the banking and the NBFC sector per se. So I'm very positive on banks per se. Depending on your risk appetite, you go for the larger banks, the top 3-4 private sector banks, but some of the tier 2 banks also offer a good trading opportunity. Only thing I like to avoid maybe is some of the PSU banks where not completely convinced about the kind of growth rates and the net interest income and the profits before provisioning. Not really convinced about the growth over there. But by and large, I think banks is where investors to look at. And second sector would be automobiles.
Banks and autos. Deepan, hi, good morning. You've had a fairly cautious view on IT services for a while, and that's played out to the dot. Any thoughts now? I mean, I'm just referring to that because that is just now perhaps the only very large grouping of stocks which has not participated, right, in any meaningful fashion in this up move.
Good morning, Prashant, and rightly so. I think it's an externally facing sector, and with overall slowdown in the economy, fundamentals in the US market being impacted, you should expect some dent in demand as far as IT services are concerned. But the long-term trajectory of these companies is exceptional, and they may be perhaps not grow at mid-teens, but at least double-digit growth rate is still assured even in a tough market environment. And very positive on mid-cap IT companies which have corrected significantly. I think they have really been able to manage the environment far better than the large-cap IT companies, and I haven't seen a phase where they are growing at a faster pace than the large-cap IT companies. So positive on mid-cap IT companies which are doing slightly a different type of service or focus on different verticals, the likes of, say, Tata Elixir, LTTS, or Mindtree. I think Persistent Systems, KPIT, I think these are all excellent companies. And these corrections are good opportunities. If you have a 3 to 5 year type of a view, I'm sure that these companies will give very good returns going forward also.
Okay. This whole specialty chemical space has been on our radar for a while. Now, there's a company called IOL Chemicals that we're looking at today. Remember, Russia has halted gas supplies to Europe indefinitely. The European chemical industry is heavily dependent on natural gas, and the current situation perhaps now provides an opportunity for Indian companies. To discuss this, we are joined by Sanjay Chaturvedi, the Chief Executive Officer at IOL Chemicals and Pharmaceuticals. Sanjay, thanks a lot for joining us. If you can just explain to us what's happening now. Are the dynamics changing in favor of Indian companies? Are there more opportunities for companies like yours? Or is it too simplistic to assume that?
So, it's a rather complex situation. You're absolutely right that Russia has halted the gas supplies to Europe. Whether this presents an opportunity for IOL and other Indian specialty chemical players, it has to be seen in the backdrop that is this a permanent structural change, or once the war is over, things are going to revert back to Russia supplying gas to Europe. And also energy prices in India are also very high. So I haven't seen too much movement. I've been discussing with some of my peers and competitors as well, and we don't see a lot of capex being driven by this one criteria, which is the gas supplies are halted to Europe, and therefore that presents an opportunity to Indian players. I think one has to take a slightly more cautious approach and try to predict, long term what are likely to be the energy prices in Europe vis-a-vis India, and then take a bet on if this is a structural change, whether we should go for those kinds of specialty chemicals.
So this ethyl acetate, right, which is one of your key products, you saw a fall in the price by about 15% in the quarter gone by, in the last 2 quarters on an average. And that has put a lot of pressure on your business as well. Your margins have been down for a while. You're barely sitting at 10% margins. You used to enjoy 20% plus last year. Do you see more pressure in the quarters to come?
So I don't see any additional pressure. The margins that get compressed is because in ethyl acetate, most of the acetic acid that we buy is all imported. And typically there is, several months lag. And there was a period just a few months ago where the prices of acetic acid fell sharply. And so we were stuck with, inventory of acetic acid that was at a much higher price. And that's what compressed the margins. I think another month or so, this pressure will ease off. And we should be back to higher margins than before.
Mr. Chaturvedi, let's just assume for a bit that some of these things which the gas does not come back on in Europe, and so maybe the cost, energy cost stays higher. The differential, as you said, between India and Europe stays high. Assuming that as the backdrop, what could be the changes for a company like you on important products? I mean, the ibuprofen API. I mean, for your products, would this mean anything dramatically different?
No, for us, it would not be something dramatically different because, we are not so dependent on Europe for either raw material or energy. And some of the products where we compete, those products are not manufactured in Europe. They are manufactured in other parts of the world. So even if the energy pressure was to continue on Europe, I don't think that presents either a positive or a negative opportunity for IOL.
Okay. So I wanted to understand a little bit about how ibuprofen demand and prices are materializing, since you are one of the largest producers in the world. What is the situation at the moment, and what kind of growth are you looking at?
The prices are very stable between $11 and $12 a kg. As far as the demand is concerned, the demand, we've seen a slight uptick in demand in the last month or so, maybe by around 5%, 4 to 5 percentage points higher than in the previous quarters. We expect this to be stable. And overall, there isn't too much disruption within the ibuprofen market as such worldwide.
So the last time you had guided for a top line growth of 10% in FY23 in the pharma segment is what I'm talking about. Do you hold that, or do you think you can do better than that?
We hold that. What's going to happen is the ibuprofen is going to be up a few percentage points, whereas it's our non-ibuprofen portfolio that we will really grow. If I just take a step back, ibuprofen, we've got a finite fixed capacity, and the business that it generates is really based on the price of ibuprofen more than anything else. Our asset utilization continues to be, in the 75% plus 80% range. So the real growth for our pharma business is going to come from the non-pharma APIs, which will continue to grow.
You've announced a new capacity expansion as well, right? Some 300 crores worth. Could you tell us more about that?
Yeah, so this is a capacity expansion to support our specialty chemicals business. We've identified a portfolio of products that leverages our operational capabilities, our supply chain capabilities, and also our technology footprint. And it would take about 18 months or so for this plant to be built. But this would really add to the portfolio of products and play to our strengths.
You'd build this new, it's a new plant basically.
Yes, this would be a new plant that would cater primarily to specialty chemicals and some pharma intermediates.
And by when would this, when do you see completion by, when do you see this coming on stream, and What could this do to your overall revenues?
So typically, in the specialty chemicals area, it is reasonable to say that for every rupee that you invest in capex, you should be able to get, 3-4 rupees of revenue out. So we expect this to be complete in about 18 months. So we probably see the impact of this after 18 months on our P&L.
All right, we'll leave it at that. Sanjay, thanks a lot for joining in and all the best for the future. That's IOL Chemicals. By the way, the stock has been under a lot of pressure. In an uptrending market, the stock is down almost 40% from its 52-week highs. The chart will be up for you on your screen. Let us slip into a quick break. On the other side, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Stay tuned.
Welcome back. The SGX Nifty indicating a startup of 18,000. This is a market which has been a delight for positional longs. I just stay in and the market does the rest for you with a gap almost every alternate day, even if it doesn't do much after that. We have Sudarshan Sukhani and Mitesh Thakkar now joining us. Gentlemen, good morning. Sudarshan, it's been such a roaring bull market, right? But what next? And for those who want to participate now, what's the entry point?
Good morning, Anuj. Well, it's been a roaring bull market, and what next? The answer would be that the bull market continues. It will continue till it gives a message that it's not going to continue. That message hasn't come, so we stay long. We look for buying opportunities. Today, of course, the point, there's a difference between the Bank Nifty and the Nifty today. It does appear that the Nifty may now outperform. The banks are likely to enter a consolidation. So the focus for me today is primarily on the Nifty. Now, for people who want to enter, add or re-enter or just enter now, you wait patiently for small consolidation, intraday dips. That's the only thing you can do. Keep a 100-point stop loss. There are no levels because the market is now going into uncharted territory. So just keep a risk management stop. If it's 100 points lower than your entry price, then you might want to consider your position. Otherwise, go long on any minor dip.
Go along with any minor dip. Mitesh, good morning. What's your approach on Nifty and Bank Nifty?
Good morning, Anuj. See, we have maintained long positions and long biases, and I think we'll continue with that. 18,165 is the first target area in the short term, if you look at the intraday pivots historically. And then 18,350 was the highest closing we got before we, highest weekly closing we got before, we saw the markets peak around 18,600. So I think these are the level to watch. We were advocated shifting to Nifty IT stocks. I think that's where the breakout is happening. So trading is slightly more stock specific biases, but the Bank Nifty, despite the fact that it might take a slight breather or pullback, I would continue to maintain a positive bias simply because of the fact that it's trading at highest levels, or it's got the highest weekly closing on Friday, and therefore unless until we see a dip below 40,300. I think we'll maintain a positive bias and trail the stop loss just to about 40,270 or thereabouts. So I think maintain a positive bias, look for targets of around 41,000 to begin with, and maybe even 41,800.
Okay. In terms of stocks then, Mitesh, what are you buying and selling?
Anuj, all buy calls today, no sell calls. It's a market clearly which is positively biased, will open with the gap up. So a buy on Birla Soft with a stop at 330 for targets of 355. Atul Limited is a buy with a stop at 9,400 for targets of 10,200. Amar Raja Batteries is a buy with a stop at 535 for targets of 572. And Divi's Lab is a buy with a stop at 3645 for targets of 3750.
Okay. And Sudarshan, your stock calls?
Well, primarily on the long side, I am trying to search for stocks that are just beginning to participate, because all the stocks don't go together with the Nifty. Let's see if that's successful. Oro Pharma is a buying opportunity. After that sharp dip, it's now probably ready for a breakout. Buy with a stop under 535. IGL has been in a strong rally. Then it has gone into a huddle for almost a month. After that trading range, it's likely to break on the upside. Buy with a stop under 419. Indigo is an intraday short. Indigo has a very weak chart. I think there is no possibility of a big gain. So look for an intraday short with a stop above 1950. And finally, Mitesh was talking about IT, and he entered the zone much earlier, the sector yesterday, day earlier also. Now I'm looking at IT. Wipro is a buying opportunity. It's again turning around from a small downtrend. with a stop at 415.
Okay, well, we'll do one thing. We'll take a break now. We'll come back to you for 9-10 calls. We'll take a break and, of course, we'll be back with pre-open rates.